Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, January the 4th. Happy New Year. I hope everybody had a fantastic holiday season and all the best for 2013. So let's start out the video. I'm recording this video on Friday. Closing out the week on Friday, but recording the video on Saturday the 5th. And essentially, it's been a really sort of quiet start to the year from an intraday basis. But from a swing trading basis, which is what we're looking at here, let's start off with the Dow futures on the daily chart. In last week's video, what we were talking about was, you had this pretty massive pullback here on this day, and a little bit of caution about this pullback being right into 61.8% retracement. Therefore, we weren't really, that interested in the short side, and really just needed to see, what the market would do if we had a potential. We talked about this potential support area. So, fast forward to today. This potential support area actually held quite nicely. That being said, it wasn't really, it wasn't a great trade setup, but it was more of a cautionary note that it doesn't make sense to take a short into this support area. And then you have all of this business going on with the fiscal cliff, really news-driven market, as you can see. I'm just going to zoom into this area here. If you look at these couple of candles, here, I mean, really what you have is a situation where, you had this pretty good pullback right into the support zone on this day, right? And then the next day you dipped a little bit lower and you're all the way back up and above the highs of the previous day. So this is more indicative of a reactionary news-driven environment. And then you can see here you gapped up above this trend line, and you pushed right up above, these intermediate highs, and you're just holding really high and tight with a couple of doji days on Thursday and Friday right above those highs. So, going back, not in last week's video, but in the video before, we were looking at, the week before, a break above that trend line and a possible, a possible retest of these highs, up here somewhere in around 13,500, 13,600 in the Dow futures. And I mean, essentially, that's where, that's where we're at now. That kind of scenario, that scenario is really on the table now. So, you really just kind of had a flush move, and it looks like we're, looking at that potential scenario where we're going to come up potentially and retest those highs now. So that's sort of what I'm looking at. I'm still more bullish than bearish. We're back on the bullish side, and we're really nowhere in terms of the beginning of this year, because you don't really have very good price action. You can see the volume is still relatively low. And you don't really have a heck of a lot of action. Like this was a move that, you most likely missed, the move from here to, the break to these new highs. And, if you miss those moves, that move, it's kind of tough to do anything. You're kind of in no man's land, even though it looks like, we could get a possible retest of those highs. But there's really just not that much to do in this market, news-driven kind of market environment where, from one day to the next, you can have, a big down bar, a big up bar. But we do seem to be more on the bullish side than the bearish side at this point in time. So I hope that makes sense. Let's take a look at some of the other markets. Okay, let's take a look at the S&P futures. The S&P futures seem to already be, right about where their previous highs were. If we draw a horizontal line here, right in around that area, and I'll just draw it red so you can see that that's the intermediate resistance there. I mean, we're definitely more bullish than bearish, but now we're right into, these previous highs right in around, right in around these areas here. 1460 seems to be the major resistance, and you can see we're just kind of pressing and knocking on, resistance door. We're still looking bullish, although, our stochastics are getting into the overbought territory. The MACD still looking bullish. Volume still a little bit sluggish. But, we look more bullish than bearish, but we're right at resistance on the S&P futures. And if we take a look at, let me just kind of zoom out here a little bit. If we take a look at, this price action, I'm kind of leaning towards the camp. Like, we might get a pullback from this resistance level, but when you knock on resistance or supports door so many times, you're going to open that door. And basically, in my opinion, and basically what we're looking at here, you've got test, 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 pullback. You're coming back up and testing that again. So could we break through? Could we break through this resistance at some point and push higher? I think it's a possibility. Will we do it right away? I don't know, but I definitely do think it's a possibility. And I'll be watching for that, a good clean break of that level, and then, a throwback or a retest back down to the breakout level to see if we're going to hold and then push off again. So let's take a look at the NASDAQ futures. And let me just see here. For some reason, the shortcut's not working, so let's just do it this way. So the NASDAQ looks weaker, but it's in the same. Its relative highs are much higher than the Dow and the S&P. Its intermediate highs going back in this area here. You're sitting up somewhere around, the values change a little bit because of contract rollover, and this is a continuous contract. But I mean, essentially, you're looking somewhere around 28.68, somewhere in and around that level. You closed around 27.18, so you still got over 100. Over 100 points to go in order to get to those intermediate highs. But you can see that these intermediate highs, right here, you essentially broke above them here, and you're just kind of holding that area right there, around 27.15ish. So same scenario in the NASDAQ, although the NASDAQ does look weaker than. In my opinion, it looks weaker than the S&P and the Dow. So that's all I really have for the stock index futures. Let's take a look at some of the other relevant markets. For example, the transports look really interesting. The transports look really interesting because the transports broke out of this major resistance area and this major basing pattern. This major, box consolidation, whatever you want to call it, and they broke out quite decisively. I like this kind of pattern here, where you've got higher low in place, and you put in a swing point right at resistance, you pull back, and then you shoot right off, like this, and then you shoot right off through resistance. Like that is a clean break of resistance. I wouldn't be surprised to see a retest. Maybe somewhere back down to the breakout area, or where the trend line meets that. As long as we hold this breakout area in here, the transports are really showing signs of strength. And if the Dow breaks out of its recent highs, then you're, from a Dow theory perspective, you're really going to have a situation where the stock index is moving higher and the transports are confirming. Now, when the stock indices were moving higher before, you really didn't have the transports confirming. Now you have a situation where you possibly could have the stock indexes moving higher, the indices moving higher, and like the Dow, and then from a Dow theory perspective, you have a confirmation or a cooperation from the transport. So I hope that makes sense. Now let's look at some of the other relevant markets. Now I want to look at some of the markets that we looked at here, and then I'll come back to some currencies. But I want to look at these from another perspective that I haven't looked at for a while, and that is the Darvas squeeze perspective. So this is something that I haven't really talked about in a while. I'm just refreshing, the screen here and looking, for potential confirmation signals. So, I've got a radar screen set up here, and essentially what this is telling me is, for example, here is the Dow futures. Here are the S&P futures, the NASDAQ futures. And if you look here, you've got different time frames here. We've got multi-time frame analysis, and I'm looking for signals on different time frames. So if I click over here on the S&P futures, and I expand the chart out, you can see here we had essentially a long Darvas squeeze firing off, where you have this Darvas box here, and you have a quiet period here denoted by this red dot, and then you have a return to volatility with a break of resistance. So here the indicator is showing a potential target of around 1500 based on the mechanics of the way this setup works. If you're not sure how this setup works, feel free to send me an email, and I can send you some links on an article that I've written. This is some of my work that I've been working on for a number of years. I'm looking at this for overall directional bias, and what this is telling me is we have potential long directional bias to the high side here on the S&P. The NASDAQ, similar situation where we had a long signal fire here with the break of this Darvas box. We had a pullback, and now we're back up and around there, and you've got a signal there as well. If we look at the transports, this is really the point of all of this. Is if we look at the transports on the weekly chart, you can see on the weekly chart we fired a recent Darvas long breakout. This is really significant because we're dealing with if you go back a number of videos, I talked about this this kind of dead zone, this kind of basing consolidation pattern in the transports for a long time. This is, these are weekly bars. This is a multi-week Darvas box, and you can see now significantly we've broken out of that Darvas box and fired a squeeze. So, you've got a situation where you've got a break of resistance in the Darvas box where the price is broken above it. You've got your Hakinashis are blue, this indicator here. Long side bias. You've got your MACD holding this zero line and it crossing to the high side. And now you've got, my trending indicator is to the high side, and you've got potential targets, up and around here much higher based on the mechanics of this setup. So essentially what you have here is, all cylinders firing for the transports. So that is, this is a big deal. That's really what I'm trying to point out. This is a pretty big deal when you see these weekly Darvas squeezes fire off, and you've got this kind of a clean setup, at least on the weekly chart, with a long basing pattern. It's probably, in my opinion, probably going to follow through. So that I wanted to point that out. I also want to point out, not necessarily point out, but let's take a look at some other markets and see if we have anything interesting setting up. You've got the 5-year. Let me just clear this off. You've got the 5-year note. You've got the 10-year. They're all setting up potential weekly plays on on the 5-year, the 10-year. Although they're in the middle. They're in the middle of their range here. You've got the 30-year. The 30-year fired a Darvas short, which is interesting. And if I just expand this out, I apologize, my platform's doing some funny things here, and this looks a little bit messy, but you had a short fire at 145 here, according to the mechanics of this setup. And the question is are bonds, are notes and bonds really ready to roll over now? That's really the question, because traditionally you have an inverse relationship between the stock indices and bonds, and essentially I think that relationship has been skewed because of all of the stimulus and that's taken place. And now you've got a situation where is that inverse relationship going to kind of come back into play, and are you going to get lower bonds? So this is something to keep an eye on. this is something to keep an eye on, especially as it may impact, future interest rates. Now, having said that, the government can step in at any time and quash that, and just re-stimulate it. I don't know how long their powder will stay dry there and provide that opportunity to do that. But the last few times where we thought bonds and notes might roll over, that's essentially what happened. Was you just got another influx of activity with stimulus, and it just propped it right back up. So that's something to keep an eye on, and we will be doing that. I want to look at some of the metals here and see if we have any potential signals setting up, and then I want to take a look at the old standbys in the currencies, the euro and the dollar index. So let's see if we can see if there's anything setting up in gold. From a Darvas squeeze perspective, there isn't. Let's take a look at silver and see if anything's setting up in silver. We're expecting some moves in the metals, but you've got a lot of volatility in the metals, but you don't have any real strong directional bias at this point in time. So let's jump back over to some of the more traditional charts, and let's take a look at the euro and the dollar index. Okay, so we're looking at the dollar index, and you can see the dollar index. The dollar index a little bit weird right here. You have, this sort of wedge pattern here, and you have this this key support area that we've identified over the last couple of videos, where we kind of faked out, broke below this wedge pattern, slightly broke below the major support of 29 or 79 rather. And now we're above this this wedge pattern now. So really need to just keep an eye on the dollar index to see where where it wants to go. It's starting to look more bullish than bearish. I mean, it's putting in a series of higher highs or higher lows rather. The higher highs are a little bit higher high here, but then it put in a lower high here. So, but it is putting in a series of higher lows. So this is interesting to say the least, and we'll just have to see where it's going to go. If it holds, essentially what I'm looking at is if it holds the top of this trend line and starts to push off, I mean, that's really what I'm looking for. If it closes back below this trend line and back, below 80, then we could just be stuck in this, kind of sideways consolidation. But if it holds above this white trend line here, this downtrend line, and starts to push off, that's really going to be a bit of a game changer for for currencies. So that being said, let's compare this to the euro futures, and at EC. And wow, surprise, surprise, the euro's right back down to that dollar, that key $1.30 area. It came all the way back down. You can see here you had resistance, which was sort of becoming support. It failed, and then it came all the way right back down to this key $1.30 level, and you got a slight bounce off of that $1.30 level. So the euro really needs to hold $1.30, in my opinion, in order to stay on the bullish side. If it breaks $1.30 decisively, then the euro's probably going to come back down and test some of these lows back down in here. So $1.30, the key level to hold in the euro. At this point in time, I'm not sure that it's really actionable, for a long or a short. Now, if it were to do one of these situations where it does this, it bounces nicely back into some of these moving averages, and then it comes crashing back down through $1.30. Then the $1.30 might be a level to look at. In my opinion, it might be an area to look at, shorting. So what I mean by that is, and this is just my opinion, this is not trading advice of any kind, but for example, if we got a situation like this where we get a decent bounce off of this level back into resistance, or, back into this level, and then it puts in another, lower high, let's say a lower high, and then it comes back down through this level, then that might be a level to look at, with a potential, short based on that kind of pattern of setup. So that's kind of what I'm looking at there. But I'd like to see a more of a decent, pronounced bounce from there. So if you really compare these two, I mean, you've got euro at a key $1.30 level. You've got dollar index breaking above, a potential. Let's just see here, a potential wedge pattern. So we really need to, to see how that's going to resolve itself, and going forward. At this point in time, I don't think either one of these are actionable. Let's just take a look at the USD CAD, see if that kind of gives us an idea if the US dollar is strengthening or weakening rather. So, it's just not really telling me a whole heck of a lot at this point in time. Now, I don't look at this currency, that often, except to see, like, are we going to get above par? But the USD CAD has been pretty weak for a while here. You've got the stochastic buried. You could get a bounce. Seems to be putting in lower highs, but now you've got a higher low. Higher lows, but now you've got, a lower high in place right around this peak versus this peak. So, I think we're really setting up for some kind of a move at the beginning of 2013. If you really look at the intraday action over the past few days, it's really been muted. We really had a lot of volatility going into, the holiday season with the whole fiscal cliff thing happening, and now we've got unresolved issues from that are coming back on the table. But that's why we're probably having a lot of just muted action going into 2013. But if you really kind of size it up, it looks like the markets are kind of flirting with key levels. The stock indices are potentially looking at retesting their highs. The dollar index is getting above resistance. The euro is right at support at $1.30 key level. So we've got some things setting up, and it's really important, in my opinion. I'll be keeping my powder dry, and I'll just be waiting to see what the move is going to be. Now, there's no point in anticipating what the move is going to be. I have an opinion based on what I'm looking at. Things are leaning a certain way, the evidence is leaning a certain way, but once the move presents itself, it'll become very obvious. There's no reason to try and get in front of that move. Once it actually happens, it'll become very obvious, and there will be time to trade it. So that's kind of how I'm approaching this market, and I'm just going to wait and see how those those key levels and these key events that are coming up resolve themselves. So I hope that helps. And I look forward to, I want to wrap this video up. I look forward to seeing you at the next video update, or, at an upcoming meeting. We've got an upcoming CSTA Oakville chapter meeting this Wednesday. I believe it is, what is Wednesday? Wednesday is going to be the 9th with Ziad Jassani of Independent Investor Institute. That should be a fantastic meeting. It's going to be on active trading and stacking the odds in your favor. So hope to see you all there. Hope this helps. Good trading and Happy New Year.